It's time to pay attention to the altcoins right now because we have experienced a bit of a dip, and I think we could be in for massive upside continuation leading into the halving, which is happening in April. So we could be seeing a potential massive rally in the crypto markets in the next 3 months. Let me explain to you why this video is super important. So make sure to smash the like button. If you are not yet following me, subscribe to my channel on YouTube, follow my page on Instagram, and make sure to save this video for later. So before I dive into the charts today, I want to share with you a concept that is a very important setup that we can see that's developing. I want to explain the setup to you first, and then I want to show it to you on the charts. Okay, so what we have here is when the price comes down, okay, this is what is known as bearish market structure. It's just continuously making lower highs. Each high is lower than the previous one, okay? And it's making lower lows. At some point, that structure changes. So when we start going up and we get above that last high, it's now made a higher high instead of making lower highs all the time. And this is known as a market structure break. The structure of the market that has been moving down all this time has now broken to the upside. Okay, so what happens is after this market structure break, and excuse the horrible drawing, that's supposed to say MSB there, we get this continuation here, and then often what we get is we get a pullback first. Okay, and the reason for that a lot of the time is because once we get this breakout over here, that is when all these influencers and retail investors and people who don't know how to trade, they all say, oh, we're going to the moon. They all buy right here at that top, they buy on leverage, and it instantly drops back. And keep in mind, this can happen on many different time frames. It happens on 5-minute time frame. It also happens on 4-hourly and daily and weekly. And obviously, the higher the time frame that we're looking at, the longer it takes for this to play out and the deeper the drop is percentage-wise. So a drop like this on altcoins on the higher time frames can easily be 30 to 50%. So if you buy this top, like most people do because they don't know how to trade, the emotions get in. We've been going higher. Eventually people FOMO in, yes, it's broken out to the upside, and then it drops. That wrecks people who are trading on leverage. It gets people even who bought the top, even if they don't use leverage, but a 30-40% drop really gets you panicky, thinking it's just going to continue all the way down. Then what we usually have is if you put a Fibonacci retracement from the low to the high, usually somewhere around about over here, so it's a 61.8 to the 65% retracement, usually you see this pullback into here, and then we see that continuation up. Okay, so we get the market structure break, the pullback, and this is the area where you want to be looking to buy with a stop below the low, targeting continuation past this high. Okay, so I know that's very technical. I've just explained an incredibly important concept in trading. If you can master this, this alone can make you tons of money, both in spot markets and with leverage. But now that I've broken down this concept, I want to go into the charts. By the way, if you enjoy this type of content, if you want me to teach you technically how these charts work and all these types of concepts, I've literally created a 50 video lesson course breaking down everything in massive detail that is part of my VIP membership, in which you also get access to my Discord group. I'm in there every day sharing chart setups, sharing trade ideas, being there to answer questions from members. The link is in the description down below. Come and join VIP. If you are trading, if you are investing, and you have more than a few $1,000s in risk capital in the markets, you absolutely want to learn how this stuff works. And my VIP can make a massive difference to your understanding of these markets, to your entry points and your exit points, and your overall profitability. There's a 60-day money-back guarantee. There's no risk. So come and sign up. You will do yourself a favor, and massive learning, no real downside. Because if you don't like the membership or you don't like the education, you can simply get your money back within 60 days. Sign up down below now before the markets go up like crazy. If I'm right about this, in the next 3-4 months into the halving, we can see massive upside. And by then, that's going to be too late. You want to be learning about this now, and you want to be taking advantage of these setups that are playing out. So let me show you now in the charts what I'm seeing. So I want to start out here with Binance Coin. This is the daily chart, and I want to use this as an example for you to show this setup that I explained at the beginning of the video and how absolutely powerful it is. So you can see this market had been trending down here, lower high, lower high, lower high, lower high, right? It's trending down. At some point we get a market structure break. That happened at this point when we got back above this high. It now made a higher high over here, right? It broke the market structure. And then what did we get? We put the Fibonacci retracement from this low to this high, exact drop to over here, this Fibonacci golden pocket. And that is the entry for continuation. So at this point, you can take a long position, to stop at the low, because if the setup is correct, it would not go back to this low or below it. So worst case, that would be your invalidation. So with trading, especially with leverage, you're risking 1% of your accounts if you're wrong. So on a setup like this, if you have a $10,000 account, you're risking $100. So if it continues to drop, you lose $100. But if you're right in this specific case, you can see the risk reward here is 1 to 3.72. So you're risking 100 to make potentially 370 when you're wrong. And because this is a proven setup that tends to work out, it has a high hit rate. When you are wrong, you only lose 1 unit, but when you're right, you make 3 or 4 units, meaning that even if you're wrong 50% of the time, you're still profitable if you only trade these types of setups. Okay, so take an entry over here, like the setup suggests, stop loss here at the lows, and we are targeting, in this case, I targeted this high, but I think we see continuation here, and this could probably even be like a 4 or 5, 6R, maybe even better than this. But even at this point, the technical target was hit. So you can see the concept that I explained at the beginning of this video, this is the real world proof of it, and a real world example of how it plays out. Wait for market structure break, wait for the pullback, we enter there, stop at the lows, and targeting these highs at least, probably these highs, and probably continuation higher. But to be safe, 3.7R is already a great return. We took the profits here. Now, before I show you the current charts and the current setup, I want to show you one more example to really show to you that this concept absolutely works. And you can go and look at the charts yourself, and you can find it over and over and over again. So here is an example of Solana on the daily chart. You can see we had a massive downtrend, as you know. This was obviously in 2022, lower highs, lower highs, lower highs every time. So it's still bearish, lower highs. Now, what we are waiting for is a market structure break. And you can see over here at this point, we got these highs, and then we got a market structure break here above these highs. And then what did we get? A pullback here. So we put the Fibonacci golden pocket here at this point, take a long, stop at these lows, targeting at least these highs over here. And as you can see, that played out 100% perfectly. Drop into the Fib golden pocket after market structure break. We hit this high, we hit this high, and you can see it actually even went way, way higher. So this trade alone, you can see over here, is a 1 to 4, meaning you risk on a 10K account, 1% is $100. You're risking $100 to make $400. So even if you're wrong 50% of the time with these setups, which most of the time it has a higher hit rate, if you follow the setup properly, these setups are good hit rates. But even if you're wrong 50% of the time, you're still insanely profitable because they were like 4R, 3R, 4R. But look at this. If you would have kept that, right, say it would have been a spot position, and even say you would have targeted this high over here, this would have been a 13R. So your risk was $100 to the downside, your upside was $1,300. And of course, I'm using a 10K account as example. If you're trading with 100K, you're risking $1,000 to make $13,000. Or if you're trading with $1 million, then obviously you're risking 10K to make 130K. This doesn't have to be leveraged. You can also use this exact concept to just find better entry points for when you enter with your spot purchases. Okay, so now that I've given you the concept and I've shown you 2 real-world examples here in the chart, you can go and look for the rest yourself. And obviously, if you want to learn more, come and join my VIP because I've got a complete course about this in the members area. So click the link in the description down below if you want to join us in VIP. Let me now show you setups that we are currently seeing in altcoins and why I think this could be this exact setup and we could be in for massive continuation. Keep in mind, we have the Bitcoin halving happening in April. That is guaranteed to happen. That happens once every 4 years. ETFs have just been approved. And I think there's just a massive still bullish momentum and potential narrative behind this. We have not yet had our first rate cut. We could see continuation of this bull market. Chart number 1, example number 1 that I want to show you is Engine. So you can see over here we were in a bearish trend making lower highs all this time. We got the market structure break here when we got back above this high. As you can see, went a little bit higher. We placed the Fibonacci golden pocket here. We got the pullback exactly into this level as I've just been showing you with the concepts and the examples. So in theory, if this setup plays out, there's never a 100% guarantee, but you can see there's a high hit rate. There's a logic behind it. You can see over here. At this point, we could take a long here on Engine at around 29 cents, stop over here at these lows, because if the setup is correct, it should not go below here. And we are targeting continuation here to the upside. I would say at least this high at 57, but likely this high at 0.74. And if we do get a full-blown bull market, this may actually just end up being the best entry point for the rest of the cycle, where you can see how high it came from. What if it goes all the way back up to about this high? You can see that's a 1 to 20 risk reward at around $2 target, right? That would be absolutely insane, but it is a potential possibility here if we do get that cycle continuation. The halving is in April, 3 months of upside only. If we get that, again, I don't know, but probabilities, this is a good setup. 1 to 20 risk reward. If you throw $1,000 at this, let's just say that is your risk capital. Obviously, $1,000 would be 1%, so that means you'd have 100,000 in risk capital, okay? Don't just throw $1,000 at this for no reason. But if you're doing this with leverage, $1,000 could turn into here $20,000 if this plays out and that target gets hit. You can also take a spot entry, meaning you could just buy at 30 cents. You have no liquidation risk. You just buy, and if it goes up that way, then obviously that's not going to be a 20x, right? It's going to be less than a 10x. It's going to be about a 7x in terms of spot, but it's still a massive ROI. If it goes from 29 cents to $2, that's still a massive, massive pump. Then let's take a look at DGBIT. We have a similar setup over here, that exact setup. We are in a bearish trend, lower high, lower high, lower high, lower high. We drop here, we got market structure break when it went above this high over here. And now we put that Fib golden pocket low to high. You can see we are right about at that level. Maybe it still drops a little bit lower, but in theory, that expectation is continuation higher if the setup is correct. So we can look for an entry right around over here at these levels right now, at about 0.008. The stop would be at these lows, because if the setup is correct, then it should not get below there. And then the target is continuation higher, probably at least this high over here at 0.13, but likely also this high over here at 0.18. So you can see over here what the setup would be. It would be a 1 to 7 risk reward. That's pretty nuts. And if we do get full-blown bull cycle continuation over here, and this ends up being the ultimate buying opportunity for the rest of the cycle, look at this. If it goes up to here, 12.5. If it goes up to this high at 0.04, which is not too crazy, 0.23 risk reward, because look how high it actually was in the last cycle. So if we are in a point in the bull cycle now where we've had the correction here in January, caveat being Bitcoin hit into the 40,000s, the CME gap at 39.3 hasn't been filled yet. Maybe there's a chance we still get a drop into that CME gap, or maybe even as low as the 3-day 50 moving average at around 35,000. I would expect if we get that it would still be very short-lived, probably 1 to 2 weeks, and we still see this continuation higher. But there is also a chance that we do not get that deeper pullback, that from here, since we hit the low 40Ks, too many people are waiting for that, and there's too much bullish momentum, and we continue higher from here as these setups correct. So my suggestion here would be, again, it is all about probabilities. Nobody can see the future for sure. So sometimes when you wait for a level that you think would be absolutely amazing to get in, it doesn't quite get there. So you have to weigh out the fact that we might actually be at a point now where this might be it. We might not go and fill that CME gap, and we might continue higher from here, as some of these setups are suggesting. At the same time, there is potential for a little bit lower, and if Bitcoin does make a bit of a drop lower, maybe altcoins still do a 10 or a 20% drop in the short term and then continue higher. So that is something you have to weigh out. If you have risk capital and you are waiting on the sidelines, you have nothing invested, you could consider maybe dollar cost averaging at around these levels. And if we get another drop, then you could deploy the rest. Or if you don't mind the drawdown, if you are within your risk limits, if you are not over leveraged and you can handle a 20 or 30% drawdown in the short term for that continuation higher, you can also make that decision. Obviously, I can't tell you what to do with your money. It's not financial advice. I'm just sharing the setups here, my opinion on the charts and potential scenarios. Obviously, anything you invest in crypto, anywhere else also, but especially in crypto, you have to assume 100% downside risk, meaning that whatever risk capital you put in, worst case, if it does go to zero, whether crypto goes to zero or whether you lose the money in an exchange hack or whatever the case is, only work with risk capital so that worst case, if you lose it all, and hopefully you don't, right? But worst case, that you will still be financially okay. Don't work with debt, don't take out loans, any of that stuff. Okay, so with that caveat out the way, I think a lot of these altcoins here are potentially looking fantastic for these setups, this exact setup that I broke down for you. And if that plays out, we are looking for massive multiples in the next 3 months or so, to the upside towards the halving. That is still my front run theory, which I've been saying for the last couple of months, that we just get back to around about the all-time high by the time of the halving for Bitcoin. And as a result, altcoins can do massive pumps because they are still way down, lower in market cap, and they haven't really moved in those multiples. If you want to get more training on these charts, on these concepts, I have a literal 50 lesson video course inside my VIP that teaches you everything step by step. I can't go through that in one 20-minute YouTube video. There's literally 50 videos in there. And then also as part of VIP, you get access to my Discord group where I'm in there every day sharing these setups in real time, sharing when I think they hit the targets, sharing what I'm personally doing when I'm looking to enter, what targets, levels, all that kind of stuff. I'm there to answer questions, I share these charts, I give chart requests, and of course there's more than 2,200 members in there that you also get access to. So being part of VIP, if you do anything with trading or investing, is absolutely a no-brainer. I make it even more of a no-brainer because there's a 60-day money-back guarantee. So come and sign up, get access to everything. If you're not happy, email support, you get your money back in full. That is how confident I am with what I'm doing and that it works and that it gets results. I mean, just one trade idea like this could pay for the entire membership fee over. We've had many members report that and share that in testimonials, that it makes a massive difference. So come and join inside VIP. The link is in the description down below. Smash the like button, subscribe if you haven't done so yet, and I will see you in the next video.